Hi, welcome to the Middle Market Alliance Growth Program webinar. We are pleased to have everybody here. We're going to give it about another minute and then we'll get started, give people a chance to join us. Looks like we're going to have a great turnout today. I'm seeing a lot of good companies, some M&A firms, some private equity folks, a couple bankers. Looks like we got some VCs on the webinar, so it's going to be great. We have a great turnout. It looks like we're going to have about 150 or so, which is a few more than normal. So I have to be on my game today, but I'm all set. I'm ready to go. I got some good rest last night, so it should be fantastic. So again, welcome everybody. Thank you so much for taking time out of your busy schedules. We are supremely confident that if you are open-minded, that over the course of the next 30 minutes you spend here with us, it will be considered time very well spent. You'll notice down below that there is a chat box. Please hold all questions till the end of the webinar. We will have a Q&A session and we'll attempt to get as many of those questions answered as we possibly can. And if we do run out of time, don't worry about it. You will have a chance to reach out to us after the webinar. So let's go ahead and get started. The agenda for today is pretty clean, a real nice agenda. We will be covering the following topics. We'll briefly discuss who the Middle Market Alliance is, what resources are available to our membership. We'll talk about deal sourcing and some of the challenges that exist, as if we need to tell you about that. Then we'll cover what we like to call innovate and cultivate. And you'll enjoy that period. You want to make sure that if you are listening at any point, it'll be during that point. And so from there, we'll discuss our Middle Market Alliance growth program. Then I want to give you what we consider the typical background of our middle market growth executives who actually deliver those programs. And then we'll cover any questions you might have. And again, answer those as much as we can. And what it takes to become a member, join the community, and what the process is for enrolling any company into the middle market growth program. So I'm going to move pretty briskly through this call. It's going to be about 30 minutes and answer as many questions as I can. So let's dive right in and get this puppy going. So Middle Market Alliance is an invitation-only association comprised of middle market executives, venture capital firms, private equity firms, intermediaries, financial institutions, finders, CEOs, CFOs, and many other professionals who seek opportunities to engage, acquire, sell, consult, or invest in middle market companies. There are zero membership fees forever in perpetuity, and all of these resources we have within our association will always be free to all of our members, and including the growth program we'll talk about a little bit later, that is free to those members as well for qualifying companies. So really excited to have everybody here. What we do is we provide a simple suite of resources for our membership. We are not an alliance that is going to focus on policies, regulations, or going to Washington, nor do we intend on establishing chapters or holding live events per se. There's plenty of fantastic organizations out there that do a fantastic job with that one in particular that we're huge fans of, the Association for Corporate Growth. Those folks do a fantastic job serving that market, that niche, and we're going to let them do what they do best. We're really intending to be a virtual environment, give access to resources such as our magazines, radio shows, our communities, opportunities into Forbes and Inc. magazine, and our MMA growth program. So let's talk a little bit about those resources that we have. So our Middle Market magazine has lots of articles around mergers and acquisitions, middle market, finance, everything that you guys are interested in. And so we have about 75 to 100 plus articles a day, updated daily, that we're going to be putting on our magazine. And so you're going to want to check that out. There's a place to subscribe. You get an email, tells you the date. It's like a newsletter, but it's our magazine. And you can check out the new latest and greatest going on in the M&A community, middle market community, and all that good stuff. So it's a fantastic opportunity for you guys to have kind of a one-stop shop. Go to your inbox, click that, look at 7,500 different articles, all about what you do on a daily basis, updated on a daily basis. So you'll appreciate that. Uh, we'll even throw some fun things in there to keep it kind of fun and interesting. So there's even leisure in there and some kind of cool stuff. So it's not just all business. And so that'll be fun as well. We are also launching Middle Market Radio, which you'll appreciate, where we're going to have middle market radio shows talking about middle market. So it'll give all of our members a chance to host shows all for free. Come on shows. Really excited about this venture, and we think it's going to be a great opportunity to put more content out there. Large distribution channels, network we're working with. They have about 70 shows. Those 70 shows get roughly 30 million podcast downloads a month. They know what they're doing. They're very good at what they do, and we're really excited about that opportunity. Then we also have our social networking community for middle market professionals. Think about LinkedIn, but strictly for middle market. And also the additional feature that you're going to have in your social networking community for middle market is live chat. So you'll be able to chat live on demand, real time with other members that are online. And what we hope this does is it spurs a lot of activity among all of you members. And you can do it real time. We're really, really excited about that venture. And like I mentioned before, we are tapped into some great channels that allow our members on occasion to get access to be referenced and featured in some of the great magazines out there, things like Forbes and things like Inc. And so you get a chance to not only have the possibility of getting those magazines, but also read of our members the great content they put out in those magazines as well. So there's a great opportunity for that. So what I'd like to do is talk about what we're really trying to accomplish here is our goal in this webinar is to clearly articulate an extremely effective strategy that solves many of the challenges that are pervasive within the middle market M&A community that is both significantly underutilized and largely ignored, to no fault of the community itself. So before we get into all that, let us really begin to build a story around some really interesting facts, starting with the interesting facts around middle market and M&A. So kind of progression to what we're here to talk about today. Starting with, make no mistake about it, as you guys probably know already, middle market M&A right now is on fire. The mass exodus of baby boomers out there who are leaving their businesses or looking to leave their businesses is creating a huge value, huge opportunity for a lot of the folks out there. And some people say that it is the largest transference of wealth in the history of our world. And those that really are positioned squarely in the middle of this activity stand to be the true beneficiaries of that. And so, I think baby boomers 8,000 a day are transitioning to the senior world, and so it couldn't get much more prolific than that right now. And so the next thing that's coming up is that we're seeing a lot of unsolicited offers to companies by investment groups that are increasing significantly as the market is getting more saturated with additional investors, making deal sourcing much more competitive, forcing many opportunity seekers to figure out ways to both find deals and find them first so that they're not waiting for these to hit the marketplace like they may have in the past. So we're also seeing a staggering number of companies that are either involved or actively seeking acquisitions. I think the number is somewhere around 57%. In the 100 million to 2 billion range are actively seeking acquisitions, are currently involved in acquisitions right now. So I think that's a great metric that we could all pay attention to, and something that I think speaks volumes as to the amount of opportunities that are out there. And then when we start to look deeper into specific industries, those begin to tell a story as well. Two in particular, one healthcare and the other one being energy, which is a space I'm pretty familiar with. And when you think about the Affordable Health Care Act, and and declining reimbursements, healthcare M&A is really heating up right now. Big pharma is chasing growth as anchor drugs go generic, and the hunt for fast-moving life sciences, IT innovation, and hospital consolidation is spurring plenty of activity right now in healthcare M&A. And then on the energy side, energy and industrials M&A transactions are also on the rise. We think about plummeting oil prices, slowing production growth. Energy players with limited geographic and asset diversity, we believe, will be really driven to consolidate or sell, and many larger, well-capitalized competitors are well-positioned to acquire. So looking at all these things, we're saying, a lot of us are really, really excited about the opportunities, but it's going to be very, very critical that you strategize around how you're going to capitalize on these opportunities, ultimately monetize on these opportunities. So let's talk about deal sourcing. We like to talk about this because this really starts to get in the psychology of what we're here to talk about today, and we believe we'll start to paint the picture as to the true opportunity that exists that we think is largely ignored, and we'll talk about that in a second. So let's talk about deal sourcing. You don't really need us to tell you that this can be a very challenging endeavor, even if you do have all the resources, including the marketing dollars and the human capital, and you have a lot of experience doing it and doing it well. With the passing of the Jobs Act, and over time, more and more non-accredited investors are going to be getting into the game and tracking some of the same deal flow, making it, I believe, more and more difficult, more of a congested environment for those that are seeking that coveted $2 to $5 million and up in EBITDA deals that we're all clamoring for. So I think it's going to be a more crowded space. I think some estimates put it, the average PEG, or VC, where they're having to source at least 100 to 300 deals just to get that one that they actually invest in. So to speak to the Jobs Act, obviously it's a huge time over the last about month and a half, 2 months, with the Jobs Act Title IV Reg A passing and being signed into law, obviously making it allowable for companies to raise up to $50 million from non-accredited investors. Clearly, a whole new paradigm shift is beginning in the world of investing. That said, let's not assume that tomorrow we're all going to wake up and our world is going to be somehow dramatically different anytime in the near future. It's going to be a long time for anyone to figure out how to scale either the crowdfunding platforms with increased deal flow and investors. And what's not going to also change is the difficulties that still will come with finding and vetting companies. Crowdfunding platforms are a long way from being a magic bullet. So new regulations, new regs, technology, none of that's really going to necessarily, at least in the short term, make it easier to raise capital or find deals, at least for a while. So some of the traditional ways of sourcing deals and the challenges and kinks of crowdfunding platforms still really need to be worked out as we're all starting to learn out there. So we want to propose a very, very interesting way of looking at all of this, of thinking that I don't think is being done, at least on a more grand scale, within most of the organizations we speak to. So it's going to challenge you to think a little bit outside the box, but this could actually revolutionize your business model in a way that maybe initially could augment your current strategies and the way that you deal source and the way that you approach your business model, but may someday be something that could be your primary source for cultivating your targets and then ultimately your investments. So we like to call this the innovate and cultivate model. Why not think in a completely innovative way in order to cultivate your future investments? What if you could exponentially increase the viable businesses that you could invest in by enrolling companies into the free middle market growth program if that company did not meet your initial investment criteria, but if you felt that it was optimized, would be very appealing to you? It's a pretty interesting proposition, right? Let me add to that. What if you could have an unfair advantage over your competitors by largely avoiding the chaotic environment of non skilled, non creative deal sourcing that's going on out there for all those that are clamoring for that all elusive company with $5 million in EBITDA? Additionally, what if you woke up tomorrow and you didn't have to solely rely on platforms, cold calls, networking, and referrals in order to source deals? What if you could actually create a portfolio of extremely well-performing companies tomorrow by simply enrolling them into a free value growth program today? With our middle market growth program, we can work with existing companies within the portfolios of our partners, alongside with the leadership and the executives of the company in order to improve the enterprise value, as well as work with companies outside your portfolio of whom you feel, again, if optimized, would be a strong candidate for investment or acquisition in the near future. Very powerful there. We have the infrastructure, the resources to do all this, so I think it's a good opportunity. Now, the program was designed and developed to work for middle market companies that have gross related revenues at least $25 million. So that's we identified as a good starting point for us, and we want to have as much impact as we possibly can. So in order to do that, we have to have some kind of criteria. We'll get into that in just a little bit here as well. So let's talk about the Middle Market Growth Program and what it is, and take a little bit more deeper dive on that, because it's very, very important in terms of needing to articulate this in a very succinct and robust fashion. The Middle Market Growth Program is one of the most comprehensive enterprise value creation programs ever designed. It was designed over the last 20 years by some of the most seasoned business valuation experts, data researchers, business consultants in the world that have put this program together, and it is supported by industry-specific benchmarking technology in order to deliver the enterprise value growth that, if adopted and adhered to, will undoubtedly produce very predictable enterprise value growth. This is not some ubiquitous high-level program. Our middle market executives drill down into over 20 plus value drivers of a business, and those are then benchmarked up against companies in the same industry of like size, using the same 800 million non-static data sets used by the banking system to determine which quartile of performance a company is currently operating, what their estimated value is at the time of enrollment, what red flags need immediate attention, and if all value drivers are optimized over the course of the year, what enterprise value could be achieved. These value drivers include, but are not limited to, things like strategy, human resources, finance, competition, legal, sales, and marketing, just to name a few. Now, the program lasts on average for about 1 year, with the executive meeting with the key personnel up to 4 times a month to implement the program. You see, value drivers are all interconnected. They're like gears. If one is off, none of them operate at peak levels. It really does take a comprehensive approach to accomplish true enterprise value growth. So, people say, well, how is this program free? We'll get into that in a minute, but it is free. The answer is yes, but we'll talk about why and get into that a little further. What I want to do is give you a quick screenshot of some of the value drivers we focus on. This is a program we developed, and you'll see the value drivers and a sampling of them. There's just a sampling of the value drivers, and then how far we drill into these value drivers and why we're able to do what we're doing. So it's very, very comprehensive, very, very feature-rich, very, very intense when we get inside of a company. So again, it's not some ubiquitous, hey, we're going to produce a report for you in about 12 months and good luck. If we're going to provide this free resource to companies, we wanted to make sure that it was so robust, so powerful, so predictable in nature that if adopted, if taken advantage of properly, meaning that there's an adoption rate of the strategies suggested of at least 80%, that at the end of that year, you're going to come up for air and have a company that has a much greater enterprise value than when we started. And so this will give you just a sense of what we do over there. So let's talk a little bit about who delivers the program. We have a hand-selected group of individuals that are what we call in our sphere middle market growth executives that had to first meet a really stringent list of criteria in order to be considered to be a middle market growth executive within the Middle Market Alliance. All of our executives are degreed. They have financial management backgrounds, so a lot of them are CFOs backgrounds, but they also have business building experience in that they've managed or operated large organizations and covered the gambit of all the different areas and aspects of a business. So it wasn't just the finance side of the business. So they've run at least $25 million companies is that baseline threshold, and they had to go up from there. So some are $100 million companies they've run, billion-dollar companies they've run. So we wanted to make sure that we had the bench to really cover the multitude of different scenarios that we'll find ourselves in terms of complexity, industries, sectors, and so we can handle pretty much anything and even get industry specific when we got an issue or a problem or concern. And so we can drill down really, really well into an organization. They all have significant experience, and they then had to go through our certification course, which is another layer. And we wanted to make sure that there is a baseline consistency as to the consulting that we deliver, the advisory that we give out there. And so we had to put together a program that they would then be certified under in order to be what we call middle market growth executives. And the core of that training certification is built around understanding all those value drivers of a business inside and out, and then not only understanding what they are, but also how to drive value at each of those. And so it was very, very intense for these executives to go through, and they all have been vetted, background checked, and have the experience and have been certified to do the work that we're having them do. So these guys are guys and gals are very, very experienced, very, very seasoned, have a ton of confidence to walk into any size company at any time and do the work and build the enterprise value. So that's very, very important. Now the question is, why do these program executives consult the company for free? Well, it's very, very simple. It's very clean, right? The reason they do it first and foremost is that it's a legacy play for them, right? They want to pay it forward to a industry of business and commerce that they've benefited from for so long. And so if they can work with the company and help them out, they truly feel like they're able to make their stamp, and they're very, very excited about that. So we love that. We love people that have an altruistic side to them, a philanthropic mentality, and want to give back. And that is actually part of our vetting process, is to see and make sure that they are not, just in it for anything else, just the money, right? They have other endeavors, other wishes, other desires beyond just bottom line, top line stuff. So. Think about it like SCORE, the mentorship program SCORE for small businesses, but for the big boys. Additionally, though, one of the reasons why they're willing to participate and do this is that we don't prevent them from pursuing any other business ventures or opportunities as long as they run it by us to determine that there are no conflicts of interest that would be violated, and that are outlined in our strict code of conduct that is both adopted and signed by each executive prior to being certified to work with companies who enroll in the middle market growth program. So with that, would like to open it up for some questions, and we'll get moving about our days here. today. Uh, so go ahead and put your questions in the chat box, y'all. Again, I said try to get as many as we can, but if we don't get to your questions, don't worry about it. I'll give you a chance to reach out to us after the fact. So the first question we got, this is actually a really good one. Did I hear that it's free for the members to join Middle Market Alliance or just the Middle Market Growth Program? No, it's free for both. You can join the Middle Market Alliance for free, and you can join the Middle Market. You have companies join the Middle Market Program as well, the Growth Program. So since it's an invitation-only organization, there are plenty of fee-based associations, as we mentioned before. We just wanted a lighter, more nimble consortium, if you will, that didn't have significant overhead, which allows us to offer it for free, and we're excited about that. So, great question. Next question is, what type of members did you say can join? So we're pretty open. As long as the members are involved in the middle market in some capacity, right? Either VCs, investment bankers, PEGs, finders, corporate attorneys, intermediaries, even service providers that cater to middle market or M&A. We're definitely open to them being members of the organization, so association. So I hope that gives you kind of a good sense of what we have and what we are looking to bring into the alliance here. I'm a finder. Can I introduce you to some private equity firms that would benefit from this program? Great question. Absolutely. It's really also another way for you to differentiate yourself from firms out there, other firms out there, and really kind of create top of mind awareness. It's a tremendous value add, and collateral benefits are too many to mention, as you can imagine. So absolutely, definitely, we're looking for finders all the time that are tapped in, that can provide another value to their clients, and so really excited about that. Here's a good one. This is simple. I'm an actual company. Can I sign up for the program, or do I have to be referred in? Oh, yes, absolutely. You do not have to be referred in. If you're a company, you can come directly to us, and I'll show you exactly how to do that here at the end of this webinar. So we're almost there. And by the way, qualifications-wise, if you meet the qualifications, you can absolutely sign up on your own. And the reason I bring that up is somebody's asked me about the qualifications. What are the qualifications? So, since this program is free, we, again, go back to it, have to make sure that we have as great of an impact as we can as a collective. And so in order to do that, we had to set a baseline and then put a few criteria around that, also to make sure that we're working with the right types of companies. But it's not a lot of criteria, so stick with me for a minute. So each company, again, must have at least $25 million in gross yearly revenue. We will consider a little smaller, but it's on a case-by-case basis. That number two is that there's no existing legal action against the company. Now, we'll consider minor litigation, minor cases, but we're not really trying to thrust ourselves into highly litigious environments. And so it's important to understand that if there's a lot of internal chaos, another example of that would be family-owned business where there's a lot of strife, confusion. You could tell at first or second glance it's going to get really messy really quickly. Little things like that. But those are just nuanced scenarios that we're probably going to not immerse ourselves in at this time right now. So number three is that all decision makers agree in writing that the majority of our recommendations will be executed. Again, we're supplying the resources to this engagement. We just got to risk mitigate against pouring it all in and having 75% of the things we suggest be poo-pooed out there. That's not really in anybody's best interest, theirs and ours. And so we like to establish an agreement around that, so that there's some accountability to that. So the other thing that we ask for is that they're willing to make a one-year commitment. It's going to take at least a year to start to work on the lower-hanging fruit, red flags in those value drivers, and then move to other value drivers to get to all of the value drivers, because each one needs to, at some point, be touched and affected in some way, shape, or form, because you tweak one, the next ones need to be usually tweaked in some way, shape, or form. And so it's going to take at least a year. So we ask that, and that they're up for at least 2 calls a month, and depending on what the need is, it could be 2, 3, or 4 calls a month, once a week, twice a week. I mean, it's once a week. I mean, once every week, twice every month. One, so you got to get in there and really start doing some real work. So that they at least attend twice a month to the program. So those are some. Those are the criteria right there. That they have $25 million. There's no legal actions. Decision makers agree in writing that they're willing to execute on most of our ideas and thoughts and concepts and methodologies, and that they show up. And they show up. And so now, let's see. I have time for one more. It looks like okay. Here's a good one. I have several private equity firms that I know would not only roll this program out to their companies within their portfolios, but if they had the option for the ones that they turn away, I'd imagine they would eat these up. How do I get this going with you guys? Oh, great question. Absolutely, they're eating up. We've done beta testing, having a lot of conversations about companies that are, like we talked about in the webinar. That's why we brought it up, of companies that are just not investment grade, they're not interested right now. Let's put those aside. Well, instead of putting them aside, let's have a conversation around, hey, we're not interested in investing right now, primarily because you're not optimized. Let's get you optimized. Let's put you into a free program. It's exciting. It's the Middle Market Growth Program with Middle Market Alliance. They do a fantastic job. We trust their work. Get in with them, and then let's reevaluate 2 months, 3 months, 5 months down the road. We may be in a different position and have a different play, and ready to invest in you. So, absolutely great program, and I'll give you the information on how to actually connect with us, and so we can get this thing going with you. So we're really excited about that. And great point, great question. So you are to get started. No matter what you do, you're always going to end up starting at our website, and that is at the middlemarketalliance.org. And if you are going to refer a company or several companies that want and you feel would take advantage of this program, you're going to want to go over there and click on the growth program referral program link. So this growth program referral program link, and we'll connect with you within 40 hours to discuss the specifics. Or if you want to join our community, there'll be a community tab there. You can do that. And then if you're the company that asked the question and you want to join directly, just click on the growth program link, and you will be able to fill out a more extensive form, and someone will reach out to you within 48 hours as well. And then if you have additional questions that we did not answer on this, by all means, reach back out to us at info@middlemarketalliance.org, and we will be happy to connect with you and answer any questions that you have. We are really, really devoted to making sure that we play our part in helping middle market companies grow and expand and thrive. And we know that there's so many tremendous, wonderful human beings out there that have tremendous experience, tremendous acumen, that we're meeting on a daily basis, that are all committed to that same pursuit. And so we're just happy to have you. I want to thank you so much for coming and joining us here at the webinar today. We understand how busy you are, and we understand very much that the strength of our organization is largely reliant on the wisdom, relationships, and overall contributions of our members. And we want to welcome to you to Middle Market Alliance. Go over there, sign up for the newsletter, come into the community, all free, get involved. You have companies that you want to introduce us to, click on that form, referral partner form. If you are a company, click on that form, growth program form. Let's get started. Let's engage. And we assure you that it'll be a great experience, fruitful and wonderful. Thank you so much. And you guys have a fantastic and accomplished day. Bye-bye now.